A Credit Guide. Chapter 1. Basic Credit Information. Live without debt. Pay off debt. Live without credit. Unless you're very lucky, you will have money problems at some point in life and your whole life could unravel with a few missed payments, so take heed, don't be frivolous, don't spend foolishly, save what you don't need to spend on the essentials. If you get into credit trouble, destroy all your credit cards, live like a pauper and either work hard to pay all your bills or default or declare bankruptcy and destroy your credit. After all the credit books I have read, my best one-liner advice is: call 888-5 opt-out and ask to be taken off the mailing lists to receive credit card offers. Go to the-dma.org and get taken off mailing lists. Get rid of all mail order catalogs coming to your house. Don't shop recreationally. Just shop when you specifically need something. Don't watch TV shopping networks. Don't cruise shopping websites on the internet. Stop buying frivolous stuff you don't need. There is a support group around with local chapters called Shopaholics which help compulsive shoppers out. Shopaholics Ltd. 15 West 18th St. 4th FL. NYC 10011. 212-675-4342. Get copies of your credit report, annualcreditreport.com, 877-322-8228, the free annual credit reports. Get your credit score, myfico.com. Organize all your debts. Know exactly what you owe. Send letters to some of them offering a settlement, like you'll pay 30% of what is owed to settle it. If bill collectors are hassling you, send them a cease and desist letter stating that under Section 805C of the Fair Debt Collection Practices Act, you request that they cease any further communication with you. Get rid of most credit cards except for one or two. Research the credit card companies and pick a new card with the lowest interest rate, or tell your credit card company that you have been getting better offers and demand a lower APR or you'll leave. Pay off your debts as quickly as possible. Dispute credit errors by the methods I already discussed. Learn the truth about credit, about how much money you're paying for interest. Simplify your life. Get rid of a bunch of your stuff. Stop spending money on frivolous things. Spend as little as you can. Borrow as little as you must, only the mortgage and possibly a car payment. Save what you can and invest it. Get another job, work more overtime, or start a home business if you have a lot of debt to pay off. Get a cheaper car, a smaller house. Drop things you don't really need, like magazine subscriptions, some insurance policies, going to the movies, etc. Make up a will. Save money. Basic credit information. I want it all, I want it now. Song by Queen. Credit is selling your future for a benefit right now. Don't mortgage your life. Live it now. Live within your means. Mr. Micawber, David Copperfield by Charles Dickens. The borrower is a servant to the lender. Proverbs 22:7. Because credit can get technical, I will offer you a brief summary here and refer you to either number 332.743 or HG 3756 at the library. Books about loans are at number 332.74 or HG 3755-56 at the library. Books about credit repair are at number 332.024 or HG 3752.5. Because credit laws are somewhat complex and change often, you might want to go to a law library or the legal section in a public library, number 340-349, or number 332.024, and read up on the Fair Debt Collection Practices Act, the Equal Credit Opportunity Act, and other credit laws. The first thing about credit is that we live in an instant, I want it all, I want it now, title of song by pop group Queen, society where we don't want to wait until we have saved the money for our consumer goods. We'd rather get it on credit than either pay high interest rates on the money we borrow or default and ruin our credit rating. On the other hand, credit is a good thing to have for necessary purchases like buying a home, buying an almost new car, going to school, Emergency situation. Convenience. You can't generally rent a car or even rent a lot of hotel rooms without a credit card. Home improvement. Start a business. Make a good investment. Debt consolidation. Credit card companies are in business to make money. When they look at your credit report, they're looking for someone who pays their bills on time, but they're also looking for someone who pays only minimum payments, because this is how they make their money, by charging interest on the money they lend you. So they don't really like the prompt people who pay the full amount within the grace period. Most credit card companies charge interest on the interest, compound interest. Whenever you use credit, do your research to make sure you'll pay the minimum amount for it as possible. The best deal in credit is the use of credit cards, where you pay off the full balance during the grace period before they start to charge interest. With this approach, you can get all the convenience of using a credit card without paying a cent in interest nor paying annual fees, because there are so many credit cards around that you can find many which don't charge annual fees. Credit is bad when you use it as a way to live well now and not think about the consequences. Before you buy anything on credit, ask yourself if you really need it, or if you can find an alternative like a used, cheaper car rather than expensive payments on a new one. If you really need something, always look around for the best deal. Don't just whip out your credit card and forget about it. Don't live beyond your means, which is the major cardinal sin of our consumerist society. Don't live in a denial fantasy world of buying a bunch of things now while in a frivolous mood in order to make yourself feel good, then cry when bill time comes up every month. Don't let your credit cards rule such that you feel trapped by all your bills. A lot of people live perpetually dull lives and get brainwashed by capitalism to associate spending money/shopping with happiness and feeling good, so there's an epidemic of a lot of people running around feeling dull and empty, trying to feel better by buying useless, trivial things they don't really need. Question using credit if you don't earn a lot of money, have big monthly bills, already have a high debt load, have a family, and you're buying something just for you without consulting them. Buy something that's not a need but a frivolous luxury like a boat or golf clubs. Buy something you don't really need that is supposedly on sale. Buy something to make you feel better. Buy something to look cool and impress others. You should take a common sense approach to credit. Keep a good credit rating so you can get a mortgage when you need one, and have a few credit cards so you can rent a car when you go on a trip and not have to carry a large amount of cash on hand in case you lose it or get robbed. Know what you can afford and don't buy useless, frivolous things beyond that. Don't even see shopping as a recreational activity. It's a functional act done to get exactly what you knew you needed before you entered the mall. Credit and financing are consumer products like everything else, so comparison shop for the best deals on interest rates, annual fees, and length of the loan. Educate yourself about credit. Always read the fine print of contracts. Keep a record of all your credit transactions, because credit companies often make mistakes in their favor. Pay all your loans and credit charges on time to keep your credit rating solid should you need to use it to borrow more money at some point in time. In general, the longer you spread your loan out for, the higher it will cost. Regardless of the size of your loan, you will probably have to pay a reasonably high administration fee, so it's almost not worth it to get a small loan under $5,000 for the fees you will have to pay on it. In order to save money on loans, find the lender with the lowest interest rate, put a down payment on big-ticket items like $5,000 down to reduce the loan, and get as short a term as possible. When interest rates fall, renegotiate the loan for a lower rate. The use of collateral will generally result in a lower interest rate. Find a loan without a prepayment penalty. A lot of lenders don't want you to pay your loan off quicker than it's due because they lose out on possible interest, so some lenders charge you the interest on the full loan regardless of whether you pay it off early or not, or they will charge you a prepayment penalty, usually 3 months interest. Look for a loan where you can pay off the principal anytime you want, not just monthly, that won't charge you a prepayment penalty. The two basic types of credit are open-end and closed-end. Open-end is also called revolving credit or personal line of credit/PLC, where the bank, credit card company or store gives you what is called a line of credit with a limit and you can draw from it. It will continuously as long as you make minimal monthly payments on it. Open-end credit includes bank and department store credit cards, gasoline company cards, home equity lines and check overdraft accounts that let you write checks for more than your actual balance with the bank. Open-end credit can be used again and again, generally until you reach a certain pre-arranged borrowing limit. The lower your monthly payments on what you owe, the more you end up paying in interest. The lenders know this and want you to get sucked in on the credit game, so you will be indebted to them for life and pay out money on interest. Some creditors who lend money offer a grace period which gives you a certain amount of days after the date of the bill to pay it off without paying any interest on it. Other charges are an annual fee, late fees, transaction fees, and the annual percentage rate. Closed-end credit is simply a loan for a set amount of money like $1,000. You may get a fixed rate of interest on it like a car loan, personal loan, or mortgage where you pay X dollars every month for X number of months. The other option is a variable rate/floating rate which changes with a national index like the prime rate. Demand credit is usually a loan where you set up a monthly payment schedule but you have the option of paying it off in full whenever you want, or the lender can call it in whenever he wants, demanding that the borrower pay it off, and if you can't, he takes action like filing a lawsuit. Then once he wins, he will put a lien on your house. With home equity loans, some lenders can take the house from under you and kick you out if you default on the loan, even if it's a small loan nowhere near the value of the house. There is secured credit where you offer some collateral in exchange for the credit, like with a secured credit card where you have the amount of dollars in a bank account that equals your credit limit. Unsecured credit is where you have a good credit history and an apparent bright future, so the lender offers you the loan/credit without the need for collateral. Your desire for a loan and/or open-ended credit and your ability to get it depends on several factors like your credit rating, how much money you make, collateral, like home equity or car ownership, ability to pay it back in conjunction with all your other financial obligations, what you want to use it for, interest rates, costs of the loan. In general, some applications for a loan or credit are handled just by filling out an application form and leaving it at that while the lender checks out your credit record. For other loans like car loans and mortgages, the lender will often want to see you face to face to get a feel for your character, verify your identity, ask you why you need the money and tell you about the loan. Be calm, straight and direct during the loan interview. Be personable but not overly friendly. Try to build a bridge rather than be antagonistic. It's all about business for the banker. He wants to loan you the money provided he can make money off you without worrying about you taking off without paying him. That's what it comes down to. If you are thinking of borrowing or opening a credit account, your first step should be to figure out how much it will cost you and whether you can afford it. Then you should shop around for the best terms. When calculating the costs of your loan, calculate total cost, meaning interest plus other fees. Some questions to consider are: what's the interest rate? What do I need for collateral, if anything? Do I really need this loan or is it frivolous? Is there a grace period for late monthly installment payments? Is there a late charge on payments? Can I pay it off early without penalty? Is it simple or compound interest? Always go for the shortest term possible to pay it off as quickly as you can. If you need to borrow money short term, you're allowed to borrow from your IRA for 60 days without penalty. Consolidate high interest loans into a lower interest one. The basic credit game. Your credit report is kept on file at a number of local, regional, and national credit reporting agencies/CRAs. Whenever you apply for credit, be it a credit card, mortgage, car loan, etc., the company you've applied to gets a copy of your credit report from one of these CRAs to determine if you're a good risk in paying them back, plus can they make money off you. The ideal credit profile they really like to see is someone who pays back the bill regularly but only the minimum amount due, because then they get to sucker it to the customer on interest payments, which is how they make their money. A good credit rating is necessary if you plan to buy a house someday and get a mortgage. Credit cards are good if you use them for convenience like car rentals and to buy things by mail order because it's less hassle than using a check. Just remember to pay your bill promptly during the grace period in order to avoid interest charges. Be wary of no annual fees for the first year deal or low temporary interest rates which will be jacked up quite high after 6 months. You can get these cards, use them during the discount period, then cut it up or simply bypass them and get a reasonable credit card up front. You can threaten to close your account unless they waive the annual fee. Either way, you win. Credit cards generally charge an extra 2 to 5% service fee for cash advances, but some offer them free. Discover Card allows you to write checks for cash for free, so do your research before you choose a card if you plan to take frequent cash advances. One way around this is to buy an item at a department store with a credit card, then take it back later for a cash refund. Think of credit card debt as 18+% loans. Plastic might be convenient, but unless you pay it off immediately, you'll end up paying a lot of money in interest payments. Over and above annual fees and interest rates, credit card companies make money by offering various other incentives such as a credit registration service where you can call one number and get all your cards cancelled if your wallet is lost or stolen, insurance plans, travel clubs, etc. Don't buy any of them even if it's only a few bucks a month they want. Your credit cards are already limited in liability to $50 per card in case of theft. Keep a list of all your credit card issuers at home along with their phone numbers, and if you lose your wallet, call them all up immediately to cancel your cards and get replacements. If a card comes with free benefits that you can use, get the card but continue to pay off your full bills within the grace period. Lower your credit card interest. Any credit that you have, call them and ask for a lower rate because you tell them another company has offered you a lower rate. Say, "Hello, I have been a credit card holder with your company for several years. I have been given offers for lower interest credit cards. I'd rather stick with you if you can lower my interest rate. What is the best you can do for me?" They give you an offer. You say the other credit card company offers you 2 points lower than that. See what they say. Ask to speak to a manager. Threaten to close your account unless you get a better deal. Credit one-liners. Banks and credit card companies often sell their deadbeat loans to external bill collectors who use every dirty trick they can to try to collect the money, but they have rules. If they break them, they could be liable to lots of money in fines. If contacted by a collection agency, tell them to provide a letter, documentation, then you'll have your lawyer deal with it, then tell them to stop calling and hang up. Bill collectors buy what is basically uncollectible old debt for pennies on the dollar, then look for stupid uninformed people to intimidate to try to collect that debt, which is pure profit for them. The Electronic Fund Transfer Act builds in safeguards for misuse of bank debit cards and reimbursement in the event of lost or stolen cards. Most of the time, you won't be liable for fraudulent purchases made with lost or stolen debit cards. You can't be held responsible if you report a card missing before it's used for unauthorized withdrawals. If you delay, your liability increases intermittently over time. If you report the loss within 2 business days after you realize your card is missing, you can be held liable for up to $50 for unauthorized purchases, which is usually waived by the credit card company. If you wait up to 60 days after your statement is mailed to you to report the fraudulent transfer or purchase, you could be responsible for $500. If you don't report unauthorized purchases or transfers within 60 days after the statement is mailed to you, you could be liable for the entire amount. Even if you report the loss right away, you may get hit with stop payment or bounced check fees. The EFTA allows a consumer to dispute account statement errors within 60 days from the date the monthly statement is sent to the account holder. The financial institution then has 10 business days to investigate and afterward notify the account holder of its findings within 3 days. Errors must be corrected within 1 business day of being detected. If the bank needs more time to investigate, it can take up to an additional 45 days, but during that time, it must credit your account for the amount in dispute and notify you of the ongoing investigation. If no error is detected after the 45 days, it must send you written notification that it will debit your account for the disputed amount. If you miss that 60-day window, you have no additional federal protections. Improve your credit by paying bills on time. Don't pay late. Don't miss payments. Don't pay just the minimum. Pay more. Reduce your debt. Limit your credit applications. Creditors know when you make new applications. It makes them nervous. Lenders like to see you with several lines of credit that you are paying off, not a lot of credit lines, maybe 4, mortgage, car loan, 2 credit cards. If you have to file bankruptcy, get a lawyer. Your 401(k) is safe in a bankruptcy. Divide credit card minimum payments in half and pay that amount twice a month. Interest is calculated based on the average daily balance of your account for the entire month. By making a payment every couple weeks, you are reducing that average balance and therefore reducing the finance charges assessed, as opposed to waiting until the end of the month to make a single payment. If you see a debt on your credit report you don't like, write to the company disputing it. If they don't answer you in 30 days, it must go off by law. Keep bugging them with letters disputing some debts. The 3 credit bureaus, Equifax, Experian and TransUnion, are required by law to give you one free credit report per year. Read every statement your credit card company sends you to see if they increased your interest rate. Many debt consolidation firms collect their initial fee then do nothing for you. Rather than use a debt consolidators, use the National Foundation for Credit Counseling, nfcc.org, 800-388-2227. Pay more than the minimum monthly payment to end the debt and not risk a lowering of your FICO score. Paying only the minimum makes them think you're a high risk for credit. The interest rate on your credit card can be changed when the credit card issuer feels like it. He has given himself this right in the contract you signed. Falling behind or missing a payment makes creditors think you're a high risk. Rather than using a credit card for emergencies, save some money for emergencies. Move your debt to a new card with a low introductory rate, then pay it off quickly. Pay off the card that charges the highest interest rate first, then destroy it. Keep doing this until you have 2 cards left. Pay your bills on time. If you don't, your FICO will go down. Don't borrow from your 401(k) to pay off debt because there's a 10% early withdrawal penalty if you are under age 55 and taxes on the money as income. The rule is that the higher your FICO, the lower your interest rate on a loan. Credit scores go from 300 to 850. Over 700 is pretty good. The credit process. If you have any charge accounts now or have ever borrowed from the bank to buy a car, or if you are paying on a mortgage, there is credit information on you. The credit bureaus have to send you your credit file when you request it. If you have been denied credit on the basis of their record, they will send you a copy of that record without charge, if you request it within 30 days of the credit denial. If you haven't been denied credit but just want to know what your file says, you must pay a small fee to find out. It is well worth your trouble to obtain your report. You may well find that there is a piece of misinformation that is injuring you without your knowing it, which you can straighten out by submitting copies of documentary proof. Never mail originals of anything important, it may get lost in the mail, of bills paid, payments made, etc. The most common reasons for being rejected for credit are: credit application incomplete, insufficient credit history, irregular employment, inability to verify credit references, excessive debts relative to income, low income, poor record of payment. If, for one reason or another, you are not listed or they have insufficient information on you to rate your suitability for credit, you must take steps to correct this. If you have no record because you hold no cards and have no charge accounts, or because you have just come in from out of town, then you'd better start assembling one. It may sound a little ridiculous, but nobody will lend money to someone who's always paid cash. You have to have borrowed money or run up charges and paid them back to be able to borrow larger sums as time goes along. Start with the local merchants in your immediate area, the ones that already know you. Even if you don't need it right now, ask them if you can set up a charge account with them. In most cases, they will be glad to oblige you. They already know you are local and that you patronize them regularly. When you get the credit, charge a few items each week and pay your account promptly when presented. In this way, you will build up a good credit record with these merchants in a short time. Go to the bank where you keep your checking account and ask to borrow a nominal sum, say $500, which they are unlikely to refuse you. Do this even if you don't need the money because you need the repayment record on their books. Repay the loan on a regular basis when due. Do not accelerate and pay it all back the next month. Strangely enough, the banks do not like that because to them that indicates a feast or famine situation rather than a steady payer. The interest cost on this loan, even if you have no need for the money, will be well worth paying to build up your credit record. Besides, you can minimize this interest cost by depositing the money you have borrowed, assuming you do not immediately need it, in a savings account and collecting the interest, which will defray a good part of the cost of the interest you are paying. Once these charge accounts and the loan have been operating for a while, proceed to stage 2 and ask a large local department store for a charge account. Most likely they will be happy to give you their charge card. Build up your rating with them by occasional purchases and prompt payment, and then you proceed to stage 3 and apply for the less selective national credit cards, MasterCharge, and Visa, which you should at this point be able to get without too much difficulty. Once you have national bank credit, it's easy to get credit from all the oil companies, which makes traveling around a cash-free pleasure. Some gas stations take national cards like MasterCharge, but most only take their own credit cards, so you should not overlook these just because you already have others. Once you have all the other cards, a paid-up loan or two and a fine record of promptly paying your bills, you may be able to get the most selective cards of all, the travel and entertainment cards. These are American Express, Diners Club, and Carte Blanche. These cards operate on a different system than ordinary retail store cards or the national bank cards, both of which are revolving credit plans on which you pay a small amount each month, until your balance is all paid up. The store or bank hopes you take a long time to pay, because they make their money on the 1.5% monthly, which is 18% yearly, finance and/or interest charges. The T&E cards, however, expect you to pay your bills at the end of the month. Let your account get 60 days or more delinquent and they will cancel you out. Although these cards do not charge interest, they do charge you a fee for membership. Since the T&E people want you to pay your bills promptly each month, they want to know that you have a steady record of paying bills promptly to other people. American Express or Carte Blanche or Diners Club look at your credit record and apply the credit scoring system as already discussed. Once you find out which credit conditions in your background are the most troublesome, from the credit report you have already sent for, you can start to create new conditions that you can then base your records on. If you were out of work, perhaps you can get a reference from someone you know who owns a business and is willing to say that you worked for him if the credit card company checks your references. If your bills are too high and you have missed a few payments, perhaps you should see one of the free counseling services that are springing up in the larger cities, which will enable you to consolidate your debts into a manageable amount. Credit card companies don't care very much about the amount you owe, but they care a lot about whether you pay steadily every single month, even if the amount each month is small and the entire debt will take years to pay off. Don't overlook ways to establish good credit without buying anything. For example, you have telephone service in your own name, you have a record of paying bills to them, which is then part of your credit record. The same for your gas and electric supplies from your local public utilities. These services, when they are in your name, will show prospective merchants that you have a record of paying bills, even if you haven't yet established retail store or bank credit. Benefits of credit cards. Peace of mind. Credit cards give travel insurance and the ability to rent a car. Some credit cards give frequent flyer miles, rewards and cash back. Having a few credit cards increases credit scores. Purchase protection in case of fraud, theft, damaged goods. Financial calculators at dinkytown.net. Credit card interest rates. Find the interest rates the credit card companies are currently charging. Bankrate.com Lowcards.com. Glossary of credit terms. Annual percentage rate, APR. The cost of credit as a yearly rate. Appraisal fee. The charge for estimating the value of property offered as security. Asset. Property that can be used to repay debt, such as stocks and bonds or a car. Balloon payment. A large extra payment that may be charged at the end of a loan or lease. Billing error. Any mistake in your monthly statement as defined by the Fair Credit Billing Act. Business days. Check with your institution to find out what days it counts as business days under the Truth in Lending and Electronic Fund Transfer Acts. Collateral. Property offered to support a loan and subject to seizure if you default. Cosigner. Another person who signs your loan and assumes equal responsibility for it. Credit. The right granted by a creditor to pay in the future in order to buy or borrow in the present, a sum of money due a person or business. Credit Bureau. An agency that keeps your credit record. Credit card. Any card, plate, or coupon book used from time to time or over and over again to borrow money or buy goods or services on credit. Credit history. The record of how you have borrowed and repaid debts. Creditor. A person or business from whom you borrow or to whom you owe money. Credit-related insurance. Health, life, or accident insurance designed to pay the outstanding balance of debt. Credit scoring system. A statistical system used to rate credit applicants according to various characteristics relevant to creditworthiness. Creditworthiness. Past and future ability to repay debts. Debit card, EFT card. A plastic card, looks similar to a credit card, that consumers may use to make purchases, withdrawals, or other types of electronic fund transfers. Default. Failure to repay a loan or otherwise meet the terms of your credit agreement. Disclosures. Information that must be given to consumers about their financial dealings. Elderly applicant. As defined in the Equal Credit Opportunity Act, a person 62 or older. Electronic Fund Transfer, EFT, systems. A variety of systems and technologies for transferring funds electronically rather than by check. Finance charge. The total dollar amount credit will cost. Home equity line of credit. A form of open-end credit in which the home serves as collateral. Joint account. A credit account held by two or more people so that all can use the account and all assume legal responsibility to repay. Late payment. A payment made later than agreed upon in a credit contract and on which additional charges may be imposed. Lessee. A person who signs a lease to get temporary use of property. Lessor. A company that provides temporary use of property usually in return for periodic payment. Liability on an account. Legal responsibility to repay debt. Open-end credit. A line of credit that may be used over and over again, including credit cards, overdraft credit accounts and home equity lines. Open-end lease. A lease which may involve a balloon payment based on the value of the property when it is returned. Overdraft checking. A line of credit that allows you to write checks or draw funds by means of an EFT card for more than your actual balance, with an interest charge on the overdraft. Point of sale, POS. A method by which consumers can pay for purchases by having their deposit accounts debited electronically without the use of checks. Points and origination fees. Points are finance charges paid at the beginning of a mortgage in addition to monthly interest. 1 point equals 1% of the loan amount. An origination fee covers the lender's work in preparing your mortgage loan. Punitive damages. Damages awarded by a court above actual damages as punishment for a violation of law. Rescission. The cancellation or unwinding of a contract. Security. Property pledged to the creditor in case of a default on a loan, see collateral. Security interest. The creditor's right to take property or a portion of property offered as security. Service charge. A component of some finance charges such as the fee for triggering an overdraft checking account into use.